Live now. What is it? What is that at the bottom of the screen there, Neil? Is that a piece of cheese?
Yeah, it's a piece of cheese. It's a big piece of cheese. Look what's to the right of it.
It's a little small. Hold on, I gotta go full screen. Is that a rat or a mouse? I don't know. A rat.
We prefer rat.
Rat.
Yeah.
Mice.
That's a preferred nomenclature.
Okay.
The rats are eating a big hunk of cheese.
What? Okay. Why?
It's a metaphor.
It's a metaphor for holes, as in gaps in charts, and they fill the hole like stocks tend to fill gaps. Am I on the right track?
I think it can be taken that way, because I think you're digging too much into the type of cheese, which is Swiss cheese with holes.
Well, that's what's up on the screen.
Oh yeah, no, but I'm liking this, like,
okay,
your English side is kicking in, your English degree. So tell me more. What are you getting out of this?
No, we all know that stocks tend to they usually, they don't have to, but they usually fill gaps. And maybe the mouse will crawl into the hole, therefore filling the hole. I don't know where I was going with that. So it's not about
mice crawling into holes.
It's a metaphor for how there are holes in my portfolio. I'm not quite sure what we're going for here.
No, your portfolio doesn't have holes. I think your portfolio is sick, as far as I understand it. You have a melange of ETFs.
I am, shall we say, diversified. Actually, that's not.
We shall.
I'm pretty diversified.
We shall, Spencer.
Yeah.
Right. So we did get. I wanted that up on the screen though. So we got the only 4.0 is asking about VISL. So I want to share my screen before we get started in 4 minutes.
Yeah.
So I was looking at it, and it looks like a ton of the stocks that we've been picking. Actually, that's not the way I want to share. Hold on one sec. It looks like a bunch of the stocks, like OXY. It looks like XOM. Which actually, let me check. Visalink. Design development of wireless communication. So it's a completely different sector than our dirty energy, but similar pattern. And this guy 4.0 knows exactly what we like. So sharing screen. Yeah. What is it? I feel like the screen never fills the screen. Like, it never fully fills it. So we're going to add this up. This is VISL, guys. This is coming from the chatter that you see up on the screen.
When you want to do that? What do you mean you want to do that? Make a little.
It's like maybe it's because my monitor is widescreen. Oh wow, perfection. That was beautiful, Spencer. How'd you do that?
That okay.
Yeah.
All
right. So no surprise here when we're looking at a double bottom that the point of control is where all of this has happened, because that's where the buyers stopped the bleeding in a downtrend. So there was a ton of activity here. So I'm just going to close the volume profile. And this is what we've been looking at. If you're new to the show, we've been looking at OXY, been looking at XOM as bottoms from strong downward trends, and then looking at entry points based on those double bottoms. Now, what we have here with VISL is a nice surge of momentum, which actually, if I bring up my volume here, which is a little bit messy, I apologize that it is. But we can see that we had this nice surge in buy volume. Absolutely fantastic. With the MACD, which is something I don't talk about much on the show, but I thought it was relevant in this case. But the MACD is basically two moving average lines, and when the fasting moving average crosses above the slower moving average, you have a bullish indicator, and the opposite when the inverse happens. So at any rate, we had our bullish indicator around here. It's tough to see because it's so slim. We got up on our double bottom. We got up to our swing high here. And a lot of times when we're talking about these double bottoms, I don't like to use like the massive wicks that spike up. I try to look for where the meat of the action is. So if you were to have a more finite volume profile, it would be where there's some actual consolidation within in the middle of the double bottom, or as the crack. Some call it the crack. At any rate, we had this previous high, which is showing that it's not a previous high, but we had this resistance level, which is showing up as resistance again on VISL. We got rejected back down, but then we're hitting support. I made this line really thick because we're hitting support right where this gap up started. So this is an important level here that we saw back in May, early June, actually. So we love long sustained patterns that happen over the course of, this is over a year. This is fantastic. So what we're looking for is probably following earnings, a change in two things. One, we want to see the RSI start trending upward, which right now it looks like it could be reversing, but we want higher highs and higher lows trending upward. And then on the MACD, right now we have this blue line, if you can see it. I know it's really small, guys, crossing down over the orange line. That's bearish. That's what's happening right now. This is a bearish indicator. I would like to see the blue line crossing over the orange line, letting us know that we have some momentum behind this upward swing, which could certainly happen after earnings. But the key breakout level here is $5.48. All right. Do you want to roll the intro, Spencer?
Yeah, let's do it.
3, 2, 1.
Here we go.
Welcome into the open, where we get technical. You should have investments in long-term growth. God, that intro gets better every time. Happy Tuesday, everyone. This is Get Technical. I'm Neil Hamilton, and my co-host here is Spencer Israel. This is the show where we talk about technical analysis for both beginners and advanced traders, making things easy to consume because we believe that you can be successful in the markets while keeping it simple. You can be real dumb and still make money. Gotta love capitalism, folks. Today, let's take a quick look at Five9. Five9 is the tech platform that allows sales teams to call a bunch of people at once and then only speak to the person that answers. We actually use it at Benzinga. I know that a lot of big big firms like mortgage distributors will do the same thing, where it's one salesperson dialing 5 people at the same time. 2 people answer. The one that answers gets automatically deferred over to another salesperson. So this is a big Salesforce thing. I'm looking at this thing, Five9, just as a fundamental thing. Yuck on this show. You know, fundamentals are secondary to what we see on the price action. But I'm seeing this as perhaps a future acquisition for Salesforce. I think that might be the thesis for people on the stock. But at any rate, what we see with Five9, and the reason I wanted to get to it right away is because I don't want to miss out on it, because it's on the move, baby. So looking at Five9, just a reminder, we're about to look at a cup and handle pattern. And every time we look at a cup and handle pattern, I like to remind folks, have a cup of coffee. Wait, what the WTF is going on with the stream? No, Google, what WTF is going on with the stream? If you're here and you're in chat, you're fine. Take a deep breath. Make sure you hit like on the video. If this video gets to 300 likes, I'll give away a lifetime subscription, or I'll give away a 1-year subscription to Benzinga Pro to whoever comments the moment that this video gets to 300 likes. 300 likes, folks. That's the number to hit. So go ahead and go for it. So Five9, let's take a look-see. I don't want to miss out on this. We can see that we had this cup and handle pattern. Our handle was real nice, accelerated very quickly. We've broken above resistance. This is yesterday's session. I'm looking at the daily chart right here, guys. Yesterday's session, we closed green above the breakout point, and we're looking good for a continued breakout. Full disclosure, I own shares of Five9 based on this pattern. What I'm looking for is, my entry was this close above. So my target is about a 19 and some change % gain over a short period. This thing, you know, with this type of breakout, it could kind of look like this, and that's fine. I'm not going to let myself get stopped out. I just want that 19 to 20% over a very short period of time. And plus, looking at Five9, it's on a, whoa, hey, paintbrush tool, classic mistake on this show. It's on a nice upward trend, guys. Nice upward trend. I think we might return to this one and trade up and down. Something to consider. All right, screw it. I can't make those paint things go away. In fact, look at this. Let's just do the garbage can. All right, there we go. We got rid of them. Guys, all right. Let's take a look at the next thing of the day. Let me see if I can pull that back up. Boom. Next thing of the day. That was 5-9. Let's do a quick review of our previous picks from last week. COOP still forming this cup and handle, but look at something that's really cool that's happening right now. This one should be on your watch list. This one I'm less sure about because it seems to have like a little trickle up. We like to see surges up to our resistance and then through it. The fact that this one has had some selling pressure makes me think that this will not have the buyers behind it to get us to our price target. So on the chart, it is this pattern. This is what the price action is showing us. But it's giving me signs that it's just going to be a trickle upward. I like 5-9 a lot more for the cup and handle. All right, let's return to DocuSign. DocuSign was my favorite pick of last week. Still in motion. DocuSign got hit like everything else in the market. Got hit a little bit by tech stocks going down. But it looks like it's returning back up, so it could be something along the lines of a cup and handle with a longer handle. What I will say about this is the same thing that I saw with Coop, which is it's a trickle up and not like a flood upward. The whole idea here is that we want to establish like a gate that an army of orcs are about to bust through with like a battering ram. And when we just see like just a couple orcs like throwing rocks at it, you're not going to get that explosive breakout that you're really looking for. What app do I recommend for options? Currently using Robinhood. That people say that I mix up Tastyworks and Tasty Trade, but I'm pretty sure Tastyworks is the platform and Tasty Trade is the media platform. Is that right, Spencer? Okay, you do.
Yeah.
You don't.
No, sorry. I confuse them. It's the Tasty brand. Tasty Trade is the. Look it up right now.
All right. Well, whatever. I think it's Tasty Works is the actual platform. I have a former colleague that really, really only trades options.
Correct.
Who swears by it.
You're correct. Yeah.
Okay, cool. I do have an account with them. It's not really funded, and I don't use it much. But they have visual representations of creating options trades. So like multi-leg options trades where it's really nice to see the profit loss potential and see like decay and like all your Greeks visualized. Tasty Works rather does that pretty damn well. I'm not advanced enough with options to really get the full use out of it, so I found it daunting. But I'm sure if I spent more time with it, I would like it. So if you use Tastyworks, guys, let me know. Let me know if you like Tastyworks. This is for options, not just for trading everything. But if someone uses Tastyworks, let me know because I'm trying to switch my brokerage. I'm looking for something more robust. But I also I want a lot of margin. I want my options trade capabilities. I want auto purchasing of my long-term holdings. So I want to automatically like transfer money into the account and then buy into the ETFs that I like without me having to think about it for just the long-term stuff. At any rate, that's some brokerage stuff. Would love to know what you guys think. Remember, if you get this video to 300 likes, we will give away another awesome tool, which is Benzinga Pro, which for options has unusual options activity signals, gives you an insight into the options chain, a lot of really cool stuff for people that are using options both for equities trading and for options trading. So that's pro.benzinga.com. I'm giving away an annual subscription. All right, guys, let's go ahead and hop into the contest. Let's hop into the contest. The trade of the day is 5-9. Trade of the day is 5-9. FIVN. All right. I've got my John Madden paintbrush stuff on here. But take a good look at it. My thesis long term, which I usually don't really like to get into, especially on this show, is that this is an acquisition target. And we want that because, as you know, that when it comes to M&As, the company being acquired usually has a surge in stock price up. And the company doing the acquiring will either sort of stay flat or go down. So we like to get into the stocks that have a likelihood of being acquired. All right. So let us keep going. Guys, a big thanks to everybody. So let me switch the tab that I'm sharing. A big thanks to everyone that participated in the Roast Neil and win free stuff. So I would love to know what made it for you guys. Was it the fact that you got to roast me, or was it the fact that you could win free stuff? What was the big draw there? We had a pretty decent turnout of participation. Just trying to get a feel for you guys. I'll look at, okay, so CHFS, KJAX, it doesn't seem like you're going to let me forget about it, but I can take a look at it momentarily. What I want to share right now is the survey results. Oh, yeah, the free stuff. Just providing feedback. Thank you, RG. Some of you guys are so good. Such a smart, caring, and dare I say it, damn good looking chat that we have for this show. I can't. You guys make me want to be a better person. You guys make me want to grow my hair out so that I can have the best damn ponytail in the financial services industry. All right. You give me the courage to do that. All right. Looking at the responses. Looks like a lot of you guys have been watching for a couple weeks. And then let's see the other one. And then some of you have been watching every darn episode. So big thanks to you for this. I'm not going to spend a ton of time on this. I do want to get back to the stock picks, but this is a contest. I want to give away free shit. So a lot of you said that you would like to recommend the show to a friend.
Wait, Neil, do you want me to share the screen? Share your screen so they can see what.
Oh,
like that.
Thank you, Spencer.
Okay,
cool. I'm nothing without Spencer. All right. So a lot of you guys said that you would recommend the show to a friend or colleague. Big thanks on that. Reasons. Some of this is inappropriate. Some of you guys maybe are kind of getting flirty, which I like. Keep it up. I need that. All right. You guys are talking about so my technical analysis, not always right. True, guys. Don't trade based on what you see people doing online. Do your own due diligence and take that into account when you're taking risk and investing or trading a stock. What I will say is that I am learning this as I go with you. I just found out what MACD was and how it worked like last night. All right, guys. So I am trading along with you. You guys, a little bit of hate at the old guard. Love to see that. Thanks, guys. Blah 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 blah. Oh, this person is not happy that we're going over the survey right now. Not happy about it. Benzinga Pro subscription for an annual, the essential one is $1,404. Entertainment quality lower than the education. Surprising. Not because I think I'm entertaining, but it's because I think that I'm not great at educating. So this is great. I really appreciate it, guys. Anyways, that's the survey. We got this one came up a lot, guys. We get it. So it's what can we change to make the show better? You want to see people in swimwear. That can be arranged. No guarantee on who it's going to be. The only person that I know besides myself that's available to do the swimwear thing is Spencer. So we can, I don't know, maybe that's a Friday stream thing.
I don't know I don't know who told you that, but that is not true.
I mean, it's in the survey. We listen to our chat on this show. All right. We do what chat wants. All right. So now, guys, we did this so that you guys could be entered to win something. So let's go through that. Prize number 1. Spencer, can you put this somehow in text on the screen? Prize number 1, a year of Benzinga Pro Essential. Prize, actually, Spencer, can you keep up with me, or do you want me to type it out? Spencer's gone.
How's that? It's up on the screen.
Wait, what?
It's
okay, first prize. Okay, yeah, I love it. I love the way that you're doing this. So talented. All right, so let's do the screen share. This is where if we had our soundboard that 13 wanted us to have, we would have the music. Yeah, that's right. We're doing it. We're doing it correctly. All right, prize number 1. A year of Benzinga Pro. If you don't know Benzinga Pro, if you don't know what that is, we're just going to go to pro.benzinga.com. This is the Benzinga trading research platform. It is a mine. Think of it like a mine with a real soft metal, and all you have to do is bitch slap the metal, and you're accumulating all of it. Diamonds, gold of trading ideas. That's what Benzinga Pro is. All right. So you get in Benzinga Pro, you bitch slap some trading ideas. All right. And you perform well in the market. That's what it's all about. And it comes with a great community, a great chat, and Ryan Fluna, who you'll see right after this. All right. So that's Benzinga Pro. First prize. Congratulations, Ajay, I think. AJ. We've got the email. We're going to record this, and we will email you if you're watching right now, hopefully. We will send you an email with all of the things that you need to claim your prize. Second prize. Second prize gets $50 of swag from... It's not rigged. Everyone always says rigged when we do this. It's clearly this is an infallible method for choosing winners. The second prize is $50 of Benzinga swag. All right. It doesn't have to be get technical stuff. That's fine. I understand if you don't want to have a guy's name on your shirt. I completely understand that. I'm fine with it because it's my name. We also got mugs. We got mugs, guys. You're supposed to do first place as the last amount. We're new, Solar Up. Next time we'll do first place last. Yeah, you're supposed to do it on the flip. Whatever, guys. I'm giving you free shit. Don't complain. All right. Next up. Bats 72. Congratulations. You got $50 worth of swag. Do me proud and pick the get technical stuff when I send you your little coupon so you can get it. Do you have to be subscribed to win? No, but you have to be subscribed to get the consolary prize, which is a compliment from Spencer, which is worth over 10 Dogecoin at its current valuation, at its 2021 valuation. All right. Third place.
Neil, what's the prize again?
Third place is the same. $50 worth of swag for third and fourth. How am I running 2 pods and only watching the comment? I don't know, guys. This is new. We're not perfect. Engel, Hard, Denise, love it. Perhaps a little German in the name. Denise. Or Angel, whatever you like to go by. You've got $50 worth of Benzinga swag. Make sure you get technical stuff, and we'll make sure that you are delivered via text a compliment from Spencer Israel, and maybe a pick. Maybe we can blend, Spencer, what they wanted in the survey, which was people in bikinis. So Spencer, are you willing to, for this number 4 to make him feel special, are you willing to contribute your image? You know what I'm asking, right?
I will contribute a pick if you're into that. I don't know if I'll contribute.
It's not for me, it's for chat.
Yeah, I know who it's for.
Okay.
We can talk about it.
Okay, we'll talk about that offline. We'll talk about that. All right, guys. The 4th and final winner of this week's giveaway is now being decided by the infallible random number generator. Golden Hair 888. Well done, my friend. Well done. We will be in touch. All right, that's it. That's it for the little giveaway. We are at 10 minutes until our guest comes on. We've got SimbasStocks coming on. Once again, a fantastic educator. And I love having him on because I sit there and take notes because he makes stuff seem so easy. So yeah, do we ship swag outside the US? Yes. Yeah, no, people in bikinis. I got it, guys. I know what you guys want. I feel like I'm really in tune with what you guys want. So let's go ahead and stop that share, pull up the charts again. And there was a stock pick. Okay. So give me, so I got NBRV, and then there was another one that was, do I ship to North Korea? Dan, no, I think you might have to come to the office and pick it up. There's NBRV, which I'll look at right now. And then there was another pick that someone mentioned. I totally forgot. So I might have to scroll up through chat. I apologize for that. So NBRV. Ooh. What we got? What do we got here, guys? What do we got?
Are you sharing your screen?
I'm working on it.
Okay.
All right. So look at that. We have got a stock that's had a long downward trend going back some time, my friends. Sometime this stock has been tossed aside by the Wall Street fat cats. All right. This is a therapeutic stock. Wondering if you have a fundamental reason that you're interested in the stock. If you do, drop it in the chat. This is NBRV, which is Nabriva Therapeutics. The interest in the stock. This is okay. So here's what I'm just going to go through my thought process. All right. I'm just going to think out loud. I don't have an immediate answer. Number 1, gap to fill. Number 2, is this support? Are we at support right here? So let's look back way over time back in 2016. No. So this stock is in a bit of a free fall, and has not found support. Yeah, it looks like the market is going down, guys. So the stock has not found support. So when I look at this, I would want to see a sustained period of consolidation before looking at it in a bullish scenario. At this point, we've got another gap down. Hell, there could be another gap down. It could return back up, but there's been no period that has established support for this stock, looking at over the history of it. So for this stock, from a bullish perspective, I'm out. Shorting, what you could say is that the MACD right about here confirmed that we're in a downward trend. And we have earnings coming up, but that's a little ways out. No telling what's going to happen there. So not really like a discernible pattern there that's going to help you out. What if they get their cancer treatment approved, though? If they get their cancer treatment approved, it'll probably spike up. But a lot of times, if people really believe in the approach and the management of the company, if people that are doing their fundamental research, especially on the institutional side, into this company, and they believe in it, you will see it reflected in the price action because they'll want to hold it at some point, and that is what will manifest support at some level. But we see that it's just bleeding value over time. So no established support. I got to be honest. I think that that means that not really many people believe in whatever this company is. All right, so we got 6 minutes. I'm scrolling up because I want to find CHFS. That's it. So KJack Studio. I'm not gonna leave you hanging. Plus, you're a name I haven't seen here before. I don't think I've seen KJack Studio here, so welcome. If this is your first one. Hey, nice. KJax. This guy, I'm bagging what you're raking, dude. So we had earnings. Obviously, the earnings were good. We've got this little gappy poo right here. Maybe I won't call it that ever again. I don't know. We'll see. I like this thing now. I'm using this tool because it just does like a strong line across everything. So we got our gap established. We've got our rounding bottom. So I'm going to use my arc tool, and I'm going to start my rounding bottom at for the left peak on my rounding bottom. I have two options here. And based on what I'm seeing in the pattern, I'm going to go with the second one. So the first option is to draw my rounding bottom at this spike up. That's perfectly viable. But I think that you'll see what you'll see here is sort of a rounding bottom within a rounding bottom. I'm going to draw mine at this spike up. I'm going to be conservative. And sorry about my stuffy nose. It's spring, and my immune system is very active. Then we can see that with this line, with the current price that it's at, is right at that point. It's right at that point. So we did have a break above. So I'm going to draw it at the high of this red candle and bring this down to the low. So we got a nice rounding bottom, not a very sustained period of time, which we like to see with these reversal patterns. But, you know, still viable. I mean, I'm sure we can go back through the chart and find other rounding bottoms. I'm actually 100% sure because I caught some when we were going back. Now what's happening? It broke down past support, gapped down, and then gapped up like crazy on earnings. So let's look at the level that it reached. I'm going to use this full horizontal tool. The tool that I'm using right now, I just click a point, and it goes horizontal all the way in both the left and right direction. So back in time and forward in time. And what this allows me to do is find whether or not this point was relevant in the past. And it's pretty darn close to where this wick was. Let's go back a little bit further. And it's probably not because the thing's just been in a death spiral for quite some time. So we had some serious resistance here, and it beat us way back down. So it's trading significantly lower than what it reached this morning. So does this thing still have breakout potential is the question. So if we use this previous level as our new resistance, what we would want to see is a return to this level. Will there be a catalyst for it? I mean, you tell me. What do you think? What does your heart tell you? After we've already hit the super high RSI, we've sold off a bit, and then we have the MACD fast line crossing over the slow line. So this is the area where it's going down, but now starting to return up, of course, coming from this really fast, explosive candle. There may be potential for this stock to continue an upward trend. There may be potential. What is telling me that it's likely not going to continue an upward trend is that we had this explosive breakout, we had a sell-off, and then now it's trading right back under that resistance. Right back under it. So some folks just took some profit really, really quick. If the candle was stronger and the body was up higher on the wick, it would be a different story. So I don't see ongoing, at least in the short term. I'm talking about the short term. If you have a fundamental reason to love the stock, I'm all for holding it longer term. In the short term, I don't see a trading opportunity because the strength isn't here above the this resistance level. We went right back down below it. Turn on the monthly time frame. Yeah, so if I turn on the monthly and you find that stocks only go up over time, that's a great way to save a lot of money. Is just use the monthly time frame and notice how stocks only go up over time. Thanks, Nature Bond, for the tip. All right, guys, I got 1 minute left with you before I bring out our guest. Our guest isn't here yet, though. Where's Simba? Does he know what link to use, Spencer?
Yes, it does.
Okay, thank you. Yeah, Sebastian says the stock is going negative. Yeah, so it's interesting stock, might have a great story, but there are every day there's 100 new opportunities. So don't fall in love with your stocks. Don't fall in love with your picks. All right, anything else you guys want to look at? What happened to TECL? That type of question tends to want a fundamental reason, like news, which you can use. Well, I can tell you what happened. Everyone sold it all at once. All right, that was an easy one. That was a layup. TECL, what happened? Or
wait. Hold on. TECL is a leverage ETF.
Is it?
Everyone,
direction.
Hold on a second here, guys.
Oh,
this is a bullish 3 times leverage technology ETF. All right.
So McCalling shenanigans. Did you know that when you asked the question? I'm just asking if you guys do you guys know about these leveraged ETFs and kind of how they work? Because it's not just levered over time. Usually it's a daily reset.
It's always a daily reset, but also I don't think that's what they're referring to. I think they did a split today. I think they did a split. So that crazy red bar, that's not real. They did because the stock.
Oh, okay, just
not the stock. The fund closed at 430 something, and now it's at 43. That only happens when there's a split. So that's like a 10-for-1 split right there, or a 1-for-10 split. So these funds are constantly doing splits and reverse splits to keep their price up,
to be useful. These are tools.
Make it useful, right?
These are not investment vehicles. These are tools for traders. Is what I'll say. These are tools for traders. McCalling shenanigans. He answered the question, which was, do you kind of know how the triple lever thing works? He doesn't. I don't think a lot of people do. So remember, these triple levered ETFs are meant to be a reflection of the performance of a sector, basically of a sector or a group of stocks. And when that sector is going in a certain direction and you want greater exposure based on your either bullish or bearish thesis for a trade, not for an investment, you may use one of these ETFs to get more out of your money. But you also can lose a lot more of your money if it goes in the opposite direction. The interesting thing about these two is that they're triple levered. It's 3 times, 3 times the slope or the price change of whatever group of stocks they're reflecting. And that resets every day. So it does not accumulate over time. And that's what allows these levered ETFs to maintain their integrity as trading tools. So if you have a short-term day trade thesis on what might happen with QQQ, which is the NASDAQ ETF, their names escape me. There are triple levered and double levered ETFs, meaning that it's 2 times and 3 times the price change of what you get with its underlying ETF. That will allow you to play it without perhaps using options. And they're also inverse too. So if QQQ is going down and you want to buy some and not use a put option or something like that, you can use an inverse ETF. I kind of stay away from this.
Our guest is in here and he's got you. TQQQ and SQQQ are the leveraged and inverse QQQ funds. Again, what Neil said: trading only, hedging, not for buy and hold. Please do not buy and hold these things for more than like a couple of days or maybe a week. That's not what they're for, and we know that because they say so. The funds, the providers, they tell you don't buy.
This is a great learning moment. So it looks like someone in chat stumbled upon one of these and liked what they saw. And I've done it, guys. Brett's here. Brett, thank you for the call out on TQQQ. I think I gave that like 6 Qs and SQQQQQ. Those are the ETFs that reflect the NASDAQ. So that's like your tech sort of levered ETFs. I have lost the old shirt trading options on those when I thought I was being a wise guy. So definitely know what you're getting into and look up a coherent strategy if you want to do that. So without further ado, enough of me. While Spencer is putting on his bikini, let me bring on our returning guest. I think this is our first alumni of the show. This is like what's that guy's name? Tom Hanks when he hosted SNL like 9 times. The man is a treasure, just like Tom Hanks. It's Brett of SimbasStocks. Brett, let's bring you on.
Tom Hanks. Love it. What's going on?
Well, not too much. Things were looking good. Things are getting a little bit red, but sticking to the strategy. How are things going with you?
They're good. They're pretty good. So far, we're having a great trading day already right now. So definitely picking up. It was a rough week last week.
Yes, it was. It was indeed a rough week. So what is picking up for you today, Brett?
So today, right now, we're in Square. Let's see. We took Square this morning, Fisker, and let's see, what else did we take? And RKT.
Square and RKT. Do you want to share your screen, Brett?
Yeah.
While you're doing that, I got to straighten something out with chat, guys. 300 likes. 300 likes. 300 likes for the gifts. All right, 100 likes. I love it. I appreciate the love. I love it. But we gotta get to 300, guys. Come on. It's easy.
Here we go. So Square. So we took this again. For those of you guys who don't know, we mostly do options with like my whole trading group, and basically what we look for is mostly momentum plays for the most part. So we'll see what's moving pre-market using either the Benzinga scanner or just cycling through our watch list itself. And for the most part, we'll go with either like an at the money option or an in the money option, or something that's pretty or fairly close to that. If it's a big mover, then you can usually go a little bit out of the money, which is kind of what we did here. But let's go over this real quick. So Square, I don't know if you saw the news, but they're announcing some type of industrial bank, right? So they were up 3% after hours on that news alone. They want to create some type of like banking service. I didn't read fully into the article, to be honest. But from the close yesterday, and it was a nice close yesterday. We had some consolidation and then a pop up going into that news. So they probably knew something there. But we got a little bit of a dip this morning. Tech was selling off a little bit. We had a nice recovery overnight because overnight futures were all down about 0.5%. So at the Europe Open, everything pumped back up, and then we ended up opening green this morning. We're still down a little bit on futures here. But anyway, we saw a dip right around these pre-market lows here, and we saw this 5-minute hammer. So we use a 5-minute when we're scalping.
Can you define the hammer really quick for folks?
What was that?
Can you define the hammer?
Yeah, so basically a hammer is going to be a bullish candle close. It's going to basically look like a hammer, right? You have your body right here at the top, and then you have a long wick down. And that usually indicates that bulls or market makers are looking to keep the price at the highs of this candle for the most part. That means that there was a lot of buying pressure going to the lows here, and they bought it all up in this 5-minute period to close the candle here. Now, it doesn't always mean that you're going to continue up from here, right? But if you can line that up with a couple other key indicators, then you're looking good. So the same thing that we went over on the last show, right? As long as we have some of our moving averages right around this area, it's usually going to be a good sign. Now, obviously, it looks pretty bearish at first when this candle was forming, right? When it was down here, this wasn't a trade to take. But when we got this candle closed, we literally entered at 9:44, so right before the candle closed. And then this is a simple play to do. You usually use a stop just below the wick. So if you get a next 5-minute close below this wick, you're out of the trade. So we took actually one of my guys in the group, Timmy. Shout out Timmy. He posted he's the king of Square. I literally don't even post Square. He probably plays this thing like every other day or so. We did a 255 call at 350. So it's at 250, right? It was at 250 then. We went with 255 because, again, this is a momentum play. Square options are pretty expensive. So if you're going to be playing them, you can go a little bit out of the money. Is a 2% move from where you're at probable for Square? Most likely. I mean, it's it's going to move usually at least like 5 to 7% within a day. Especially
how far out of the money do you have like a gauge for how far out you want to go?
Basically, like what? So like as long as we think it's going to definitely hit our target. So like if it's today, again, today's Tuesday only. So as long as we're in the money today, like that's going to be a probable option to take. So 250 would be fine. 250, 250, 255. Even 257.50 is like pushing it a little bit, but we'll usually probably stick with like 255 or so. But we already trimmed that, and right now it is, let's see, right now it's $6 each. So those are up about.
They were $3, right, before?
Yeah, he got them at 350.
Right,
so they're at 6 right now. Yeah, so he's about like 70% or so. I already trimmed a couple, but I'm holding 2 runners right now. So,
let me ask you a question, Brett.
Oh,
so
yeah.
we've had this come up. I'm glad that so Brett is your day to swing trading options, right? So you're looking at Friday expirations in most cases, if I'm not mistaken.
If I'm day trading them, yeah.
Okay.
If I'm swinging, I'm always doing 1 month out at least. Usually, I'm personally in an Amazon trade, but I told them I got out, but I didn't get out because I'm kind of watching it. But I didn't have time to tell everybody. But everybody's in on this Amazon one. This is a scalp too, but we usually scalp in between our swings, right? So literally, the only reason that my swings were able to survive without me having to really take a really big hit last week is because we were scalping every single day. Mm-hmm. So last week, while I was getting crushed on all my swings, right?
Yeah.
Let me remove some of these drawings here. While I was getting crushed on a bunch of my swings, literally every single day, I think last week, I caught the bottom on Shopify. So, and these were like 4 or 5% moves every day from the lows, even though it doesn't look like, too much on Shopify, the actual candlesticks here, it's a big percent move. And if I'm playing, and I was playing Friday expiration, so every 1% move, and I think we went over this too last time, right? When you're in the money, every 1% move on these high price stocks, right, is going to be pretty much fully intrinsic premium being added. So if the stock's going another $12 in the money, I'm making another $1,200. So as long as we're momentum riding these and taking profits at key levels, obviously this is a key resistance right here, right? Up here, rejected, rejected, rejected. But we made a higher low here, and then yesterday wasn't the best, but I think we caught this yesterday too, somewhere around here. But I was just basically looking for scalps as much as possible at some of these lows just to kind of survive. We did a bunch of different trades. For the most part, we caught a good Fisker, I think, the other day.
So really quick, when you're looking at those swing lows that are hitting your support levels, mm-hmm. is the touch on support, is that the moment that you're looking to buy the contract?
So yeah, exactly. But we want to see some type of confirmation, right? So I want to see some type of hammer form there. I want to see some reversal doji, some type of candle indicating that we're going to look for a type of reversal from obviously momentum going down to now switching up. So I don't just buy at those levels. I need to see some type of buying at those levels first.
Got it. Which is consistent for folks that are watching this show as well. It's not an indication of something that you can hang your hat on until there's confirmation in the direction that you expect it to goes in.
Right.
That you expect it to goes in.
Exactly. So yeah, because a lot can happen, right? Just because you're getting there doesn't mean just blindly buy. The only time I'll blindly buy, usually, well, no, I really don't ever blindly buy just based on a support level. I have to have at least one other thing there. But usually, I think we went over it last time too, is the 200-day moving average, I'll just buy there for sure if it's on the daily. So Amazon, right? Again, this is where I just will blindly buy.
Hold on one sec. I got someone coming to my apartment. Hey guys, not now. Can you wait 20 minutes, please? Thank you.
They're trying to get some tips. They're trying to get the Amazon intel, man.
That's all my neighbors. They hear me yelling. They want the tip.
The Amazon trades are usually hot. Anyway, so they anytime we have a pullback to earth, right? When we have a big consolidation after a move up. So let's zoom out here, right? Obviously, Amazon on a rip all through COVID, right? Huge consolidation here. We were playing in this range for a while. Got chopped out a couple times, right? I got faked out really bad on a 4-hour close here. Had to close that. But basically, in between that, we were scalping, swinging, because this is the daily, right? You know, on a week-to-week basis, all these touches here, the lows. So right now we broke down. You know, it looks kind of bearish, right? We did the same thing though on the Qs, Nasdaq, but they actually reclaimed back into the trend line here, the bottom trend line. If we switch to NQ, I'll show you that in a sec. But I think today is going to be a key day to see like if that was really a pump back up or if we're getting like a little retest here, right? So if we get this kind of retest here and then a move down, it'll be a little ugly.
So when you see, actually, hold on. So I'm sorry if I just missed some of that. I was super distracted by the maintenance guy coming in. When you see, so right here we've got a pennant on Amazon, and I wonder this all the time. When it breaks down out of the main pattern structure, so we've broken out of our broken down past our sloping support line there on the bottom, right, drawing green. When it breaks out of that, do you still look for it to sort of enter back into the structure and say it's still in play?
So the only reason that I say that here is because it didn't break here, it didn't break here, it didn't break here, it broke here. But what do we have right here? Again, the 200-day moving average. So this is kind of like one of those situations where it's like, you know, you hold a little bit past what you would on the chart, but you're going to still, you know, and that's up to your, you know, it's just up to you as a trader, right? And at the end of the day, you know, we still have these lows. We have these lows here, right? I'm not going to let it go all the way down here. I know if I get a daily close, you know, a hard daily close below this 200-day, you know, if I get another one pretty much, because we had one on the 25th, but then the 25th was just ugly on Thursday.
Yes.
But the next day we had a nice bounce up, right? And then we're continuing up now. But, you know, it's kind of like a case-by-case basis then. But if the 200-day was like down here, let's say it like curled up and it was like, I don't know, like over here, then yeah, I'd close out of the trade. But the 200-day moving average on the daily is going to be your strongest support, like regardless of anything, always, like all the time. The amount of times that prices bounce there is like dramatic over, you know, the course of history.
So okay, so that's one to remember, guys. 200-day is just the ultimate line in the sand for support.
Pretty much, yeah.
So if it breaks down past the 200-day moving average,
there's a good one on.
Maybe run for the hills.
Yeah, I mean, this is probably the greatest Tesla. This was the greatest thing you could have ever done, like in your probably entire life. Right here.
When it touched
COVID low. Yeah, this was like one of the only ones that like it touched. Like the COVID lows was the touch. Because most stocks, right, they broke through during COVID. So it was like, couldn't really do it there. But Tesla was on again, the best way to do it is if it's way above that 200-day moving average, because that means that what happened? There had to be some type of big sell-off to get back down there, or a big consolidation to get a move back here. So when you get that touch, you're going to get a run. And I'm not looking to buy Tesla. None of, at least a couple of most of the guys in my group, the admin at least, we're waiting until we get in this 550 range, 500 or so, and then that's where we'll load the boat. And what do you think is going to happen when we get there? Probably 200-day will curl up right there.
Oh, I like it. Okay, so we see it sort of a convergence with the 200-day.
Yeah, so, I mean, you know, you could have bought this range here at a decent little resistance here and support, turn support. But if you would have to switch to the hourly. Personally, this was a great buy the other day for like a little dead cat, right? But I don't know what's going to happen here, so we'll see.
What is a dead cat bounce for? I mean, I know, but I don't think chat knows.
Sure. No, I'm just kidding. So a dead cat is going to be basically when you get a like a relief bounce guy when you have an aggressive sell-off that's going to continue, but obviously you don't just go straight down in an aggressive after an aggressive day. You're usually going to have some relief buying right before they push price back down. So we don't really know yet if this was one of those scenarios, right? But basically it would be buying pressure here, a move back, up to the previous support level. So this is where it broke down, right? Rejected here, definitely rejected down. And then you have a continuation down. So something, a bounce to here, and then it bounced back down to hopefully the golden pocket of this entire move up.
Okay, so I'm going to start a new thing. We're almost at time here. I'm going to start a new thing with you, Brett. I'm going to do this with our guests from now on.
Yeah.
Which is so right now you're using a charting tool. Tell me which indicators, and we did this last time, guys. So go back and watch the last episode with Brett, SimbasStocks. Brett, what indicators do you have on right now?
All right, so I'm gonna, whenever we do this, I'll leave them up here, and they're all here, and it makes it a little easier, right? So my 50 MAs, and you can see the color's yellow on the number. So that's the yellow line. The blue is my 20 EMA. Volume's just volume. My 200 MA, we went over that right here, and then I use it's called visible range. It might have a different name on like different platforms, but it's the volume profile visible range, which is right over here. And basically what that does is it shows the amount of shares traded at that level based on what I'm showing on my screen. So for instance, obviously price stayed around here the longest, right? This is the longest period that we had price stay at a certain level on this chart so far. So there's going to be a large amount of volume here because price was there so long. So you can kind of use this. You don't even have to have like, if I didn't even have candlesticks on here, like if I deleted the candlesticks and I just had like a blank chart and only this, I could easily tell that this is going to be a support level because that's where price was for so long. Obviously it must have broken out higher. So when it comes back down there, that's going to be a strong support.
Yeah.
And if you zoom out, you can see it changes, right? Because what are we doing? We're using a different visible range. We're looking at a different amount of data that is visible. Mm-hmm. So now this is where our highest volume was because why? This is where price was for a period of months longer than this consolidation here. So.
And something to point out too for folks, a lot of depending on what tool you're using, when you turn on volume profile as a study or an indicator, you're going to get different colors to indicate buying and selling volume. And it looks like Brett says, I don't care whether it's buying or selling. I just want to see the sheer volume. So he just has them both at blue.
Yeah, I can do this.
Yep, there you go. So that's what it'll normally look like when people turn it on.
Yeah, I mean, sometimes I used to do this, but I kind of don't like to have a bias. I don't know. I mean, it's not even really a bias. Like at the end of the day, that's just volume for me. I'm going to look at candlesticks to see buying and selling, price action wise. So
almost
just leave it blue.
Brett, almost everyone that I've talked to, like through our boot camps, like all of these educators do not care whether it's buying or selling when they're using volume profile.
Yeah, I mean, it doesn't matter because at the end of the day, you could have a bunch of buyers that just get exhausted and then the candle closes green. Like you have a hammer, it's going to go up from there. It just depends, how exactly you get that candle close. Even though there was a lot of sellers there, if buyers are going to step in on that next candle or the candlestick still looks, bullish, that's what you're going to want to go with. You don't want to just base it on volume alone.
So Brett, we are at that time.
Man, these go by quick.
I know. We don't get enough time. I really think that this should be a all-day stream.
All right, I gotta go anyway. Let me go.
So before,
but yeah, no, I'm just kidding. Let me see if anybody has any questions. Do we have a couple minutes?
So one is Turbojet here, and I think this is about volume profile.
Yeah. Okay.
He's asking, so buy at the peak, and I'm assuming the peak is probably the point of control on volume profile is what I'm guessing.
Yeah. So your point of control is going to be your strongest. So if you're above it and you come back down, then it's going to be your strongest support, obviously. And if you're below it and you come back up, then it's going to be your resistance, right? So obviously, so this is a good example. So we're scalping right now. This is just a 5-minute time frame, guys. So the highest amount of volume was at 254.94 right now, because why? Price couldn't get above here. There was a lot of buying and selling going on. So now we smashed through that. I'm sure now we will go to probably right here, this low here and this high. So we're probably, I bet Square, I'll probably close the day somewhere, or not close the day, but hit around somewhere 260 to 261. So that'll be my blow off the top target for this. This will be like a 200% trade.
What? Okay, so do you mind taking a stock pick? You can take a look at it.
Yeah.
Neo.
So Neo, right? And again, when these earnings happen, you have to kind of let them digest it a bit. Neo dropped. It was up after hours because they had good numbers, I think, but they dropped because, or maybe it was XPEV. Shit, I'm not too sure which report I was reading, but I'm pretty sure like year over year demand was up, but it was down big from last month.
I think they had a shortage of I think they needed chips too.
Oh, that was, yeah. This one was, that was XPEV then. Okay, then that was XPEV for sure. And XPEV is also EV auto over there.
So was Neo was getting hit by like a lot of others by not having chips.
Not having the chips available. Yeah, there's a chip shortage out there, right? So and the semi industry has kind of been holding up a little bit better than tech. So I think, you know, whenever they get that sorted out, or if they work out some type of like government deals and stuff, those could pop. So be on the lookout for those. But yeah, Neo kind of took a big hit on ER. Nothing crazy though, right? It only gave up pretty much what, 1 day gains. So, you know, this is always going to be a good sign still. And they had bad sales last month, but that's because of the Chinese New Year. And they said that, and that was in XPEV's report also. So, you know, you kind of just want to wait to see how this plays out. Again, I like to kind of play earnings like if it has a little pump after hours and then it dumps, I'll just look for a buy pretty much above that initial level. So like $50 here, but I always use the daily, right? So on the daily, it still looks good. You know, it looks decent. We haven't broken down to like new lows here at all. So it wasn't a crushing earnings, right? But I wouldn't be a buyer until it gets like back above, you know, 50 or so, something like this. And we'll see what happens. There's a big fake out here, right? There's a pop up retest here, and then we kind of just kept selling off, which was kind of ugly. But that was all the EV space. A lot of them did that. So, but yeah, that's how I would play that, I guess, man. Not really any trade here. It still looks good though if you're holding. And then, you know, if you wanted to take a trade, you could take a little more aggressive one right now, and then, you know, have a stop below just here, like 44, something like that. Yeah, that's what I would say.
All right, great, robust. So Brett, I'm getting from Spencer. Spencer, here are the messages that Spencer sends me. One, he tells me every time he has to go pee. So that I know that I'm in control of the ship. He also told me that we need to wrap right now. So Brett, I want you to tell folks where they can find you and learn more. And that we apparently have a special show up next, so we got to quit early. But Brett, where can folks find
a special show?
No, this is some BS. This is some BS.
Kidding. So this is where you guys can find us. SimbasStocks.io is our site. If you guys want to check us out. Got all our info on there. You can check out all of our membership packages and everything. We use a Slack chat. So literally every trade that we take ourselves, we would post. So for instance, here on the Square one, you would have got a signal from Timmy or one of the other guys who posts one. It was literally said, we're opening a Square 255 3-5 call at 350. And that's what we're getting in. And then everybody just puts an in emoji in. And then that's it. And then we'll say when we're exiting. And so it's up to you guys if you want to take it. But we teach you how to do this stuff in and out. We hope you guys will, you know, get to our level or even higher, you know, by joining us. So let's go. That's it. That's what we're at.
Get in there. I want to get in there. I'm gonna join today.
Hit me up, man.
I will. Brett, thank you so much for joining us, and we will have you on again soon. So right. you have a great Tuesday. You go collect on Square, my friend.
I will. All right. Cheers. Thank you.
Cheers. Whoop. Okay, guys. It is 10:29. Spencer told me it's hilarious because I see him right now. He's wearing a bikini and he's got this look on his face, wearing his glasses, like Neil and the stream. So I'm all mixed up. I'm feeling all kinds of stuff that I've never felt before. Spencer,
Neil, do you know who you look like right now with the headphones and the whatever that is on your head? You've got
is it John Belushi? Because someone in the survey said I look like John Belushi.
You got this like Princess Leia look going on, like with the buns on the side of the ears and the yeah. I know Chad sees it. I know they see it. I see it too.
Loving the Star Wars reference.
All right, guys. All right, here's the deal. For everyone wondering about the streams, we're doing one long stream and different streams today. Best of both worlds. That's what you get here. Up next, here's what's going to happen. We're going to end. If you're in the Get Technical video, that stream's going to end. And Women in FinTech is starting like right now. We're doing a special 4-part series in honor of Women's History Month. We've got one of my colleagues is the host, and Jordan is the host, and today she's got Betsy Eisenberg from Macoya, Jen Yip from Lunch Money, and Amanda Span from the App Accelerator, talking about how they got to where they are in fintech, trying to close that gender gap. So, Neil, that's going to be a wrap. Everyone, smash that like button.
Smash that like button. Smash that like button. Attend the Women in FinTech thing because it's fucking awesome. Yeah. And we've got Kathy Wood, live interview with Kathy Wood this Wednesday at 2 p.m. Eastern. So make sure you register because it's going to be kind of like a mini town hall. Don't tell Kathy. But if you win the contest, you'll get to ask Kathy Wood, my personal favorite person of 2020, a question. And I'm not allowed to because I work at Benzinga. So I'm counting on you guys. Smash a like, watch the Women in FinTech, and make sure that you attend the Kathy Wood thing. Spencer, you put your shirt on. I don't know why. Thank you all. This has been Get Technical. I'm Neil Hamilton. This is my co-host, Spencer Israel, who's oddly prudishly wearing a polo shirt. Thanks so much for attending and happy trading.